In the new dawn of ChatGPT, the AI model is being used to predict stock movements and crypto shakeups. And let's just say that the limitations to human reasoning have taken a new turn of uncertainty. Gone are the days when you'd have to do some solid number crunching in your head to manage your finances. It seems like GPT-5 is the answer to all of our prayers. GPT is the new financial analyst. There might be a good reason why you haven't thought about investing in stocks or buying bitcoins. After all of these gimmicks promise quick returns, but that's largely dependent on your guesswork and the strategic predictions you make. In many ways, stock returns are essentially random. Even if you do your thorough research before investing in Google, there are several variables that you might not take into account. Or very simply, you don't have enough historical and up-to-date data to analyze trends that will help you make the right choices. GPT doesn't have such limitations. In the pre-GPT age, there was a lot of emphasis on using machine learning to predict stock movements with the sheer power of forecasting and data analysis. The idea was that instead of trying to figure out the intrinsic value of a stock, you look at the stock charts and trading signals to guess if the prices will go up or down. But for an average small-scale investor, that's a lot of work. Then GPT changed everything. According to reports published by Bloomberg, people began to use GPT to gauge stock movements. Prompts like, "Hey GPT, is it safe to invest in Nvidia?" have gained much traction on the AI model. To a large extent, GPT-3 was pretty helpful in giving you information about small-cap stocks in the tech sector, or any risky investments that would yield a loss in a choppy market. In fact, even the most seasoned investors started to copy-paste financial statements into ChatGPT and asked very specific questions about their insights that they probably missed. At the same time, people were using GPT to predict the price of Bitcoin in the near future. Even though the AI model was very cautious about citing any specific predictions, users found it far more sophisticated than Google to tap into quick market insights, historical data about altcoins, and the general outlook of the Bitcoin market. But of course, the winds have changed course drastically with the release of GPT-4. Here's the thing. The first 3 versions of GPT are sophisticated, but real-time forecasting of stock price points was a bit above its pay grade. But with GPT-4 and GPT-5, we are entering a new realm of an AI-powered Wall Street, accessible to everyone at their fingertips. Gone are the days of celebrated analysts on Wall Street who would track market trends to give you a degree of certainty about your investments. And nope, you wouldn't have to browse through those unreliable crypto blogs to predict when there'll be a boost in Bitcoin in 2024. Now, the world is in the palm of your hands. In shocking news, GPT-5 has the utmost enhancements to do money-making gimmicks with precision and sophistication. Why is GPT-5 disruptive? GPT's journey started with ups and downs like every other tech success story. While it was a remarkable substitute for Google, it still lacked proficiency in responding to complicated prompts that required real-time data processing. In a famous experiment by Bloomberg, the analysts asked GPT 3.5 to create a winning portfolio for the US stock market. In other words, the analysts wanted to see if GPT could design an exchange-traded fund, or ETF, that would beat the US equity market. In doing so, Bloomberg was essentially pitting the AI powerhouse against other AI-guided investment mechanisms that were beating Wall Street at its own game. The experiment was score 1 for the humans, as GPT didn't respond to the prompt. It gave a muffled answer about trusting a human source in matters that are statistically uncertain or require market analysis, but that wasn't it. In questions about designing an ETF to deliver a return uncorrelated to the US stock market, GPT's response was straight out of the institutional playbook. That gave analysts a glimmer of hope that GPT needs to be pushed slightly over the edge to deliver proficient responses to questions involving forecasting. And well, they were right. Now, the new iterations of GPT can predict stock movement better than fancy analysts in suits and ties. And it does so by the sheer power of analyzing and searching through thousands of news headlines. The LLM parses through the headlines published online, particularly in financial newspapers, and corresponds them to the stock prices. In other words, it uses real-time data, trends, and events of the financial markets to predict the price points of the stocks. That's right. In experiments conducted on GPT, experts have funneled through the model's emerging capabilities. And we need to unpack this idea a little. Sure, OpenAI was forging an LLM capable of something bigger and more. Passing MBA exams or running complicated codes just wasn't cutting it. What we're about to tell you will shock you, though. It turns out that the company didn't actually train GPT to forecast stock movements or predict the most lucrative altcoins for its users. To be fair, it's a very risky business. Stock markets crash all the time, and crypto shakeups regularly devastate investors. However, as the LLM works on an ever-growing dataset that is pretty sensitive to marginal changes in the existing trends, GPT naturally developed the ability to conduct financial and market analysis. Just like that. And it's only the beginning, the great equalizer. The most straightforward way of making GPT predict the stock price was to use historical data. For instance, you could download the data about Amazon stock from NASDAQ, upload it on GPT, and ask it to analyze the file to predict tomorrow's price. In that case, GPT's prediction was overwhelmingly better than a random guess made by humans based on recent events or other disruptions in the market. But then, research conducted at the University of Florida synthesized the process by using newspaper headlines that were more attuned to financial markets than a data file from NASDAQ. The researchers fed GPT at least 50,000 news headlines and then entered the prompt. Forget all your previous instructions. Pretend you are a financial expert. You are a financial expert with stock recommendation experience. Answer yes if good news, no if bad news, or unknown if uncertain in the first line. Then elaborate with one short and concise sentence on the next line. The next day, they compared GPT's predictions to their acquired trading data. And well, it turns out that Goldman Sachs was right. Generative AI can render 35% of the financial sector jobless. GPT's predictions didn't miss a beat, and it did an analyst's day of work within seconds. No wonder experts are calling GPT-5 a great equalizer of earning through investments. Making almost certain gambles about stocks and investing in bitcoins has been a rich pursuit. Investors with access to machine learning systems or AI-governed software had a better hand at working around the stock movement. The remaining 99% invested their money by looking at short-scoped data or just doing random guesswork and leaving everything up to fate. Not anymore, though. Now, you also have a powerful tool at your disposal that is faster and more reliable than financial analysts. This is why it is the perfect time to check out the generative powers of GPT and play around with it to configure your next money-making move. If you're exclusively into crypto investment, GPT is making strides in that department as well. The most recent test conducted on the AI system is about the price of Bitcoin. So, here's the thing. Many users prompted GPT to predict the Bitcoin price, or more specifically, figure out if the cryptocurrency would reach 100K in 2024. Now, this was a choppy effort because the prompts weren't feeding data into their questions. All in all, GPT was relying on its emerging abilities to answer questions that it wasn't trained to answer in the very first place. But even then, it was able to answer questions about Bitcoin on theoretical grounds that were cognizant of essential factors like AI disruption in the market, blockchain tech development, trading strategies, and so on. Not a bad effort at all. And yep, to quench your curiosity, GPT does believe that, theoretically, Bitcoin can reach 100K. But of course, it also flags that such measures could be highly speculative. These exercises were being conducted on GPT-4, though. The next explosive iteration of the AI model, GPT-5, will have the most refined power of datasets on its side. And that's precisely why it will have the cognitive capacity to map out the precise trajectory of an altcoin. Right now, blockchain technology also desperately needs to keep up with the growing realm of generative AI. However, we don't think there's a long way to go. This is why experts and financial analysts are labeling GPT a disruptive force. And it's not just limited to the arena of tech or AI. Ultimately, GPT-5 is going to change lives. Found this video helpful? Give it a like and subscribe to our channel.